Good morning, guys. I am recording another session, guys. Yeah, sometimes, but some days as such, guys, I record two sessions in a day so that I can record two sessions of some other subject, guys, on the next day. So, anyways, guys, we were discussing question number 15 beta in the previous session. All the questions that we did beta were nothing but based on transfer pricing and goal congruence, where minimum transfer price beta is variable cost per unit plus, that is your additional outlay per unit plus the amount of opportunity cost. Maximum transfer price beta is lower of net marginal revenue and the external supplier price for the other division. We were solving question number 15, guys. In question number 15, the first division, the selling division or the transferring division, guys, is manufacturing 4 products. There is a limitation of labor hours as such, guys. So we arrived at contribution per labor hour. I repeat, we arrived at contribution per labor hour as such, guys, to check better what would be the resource allocation of this particular division without considering internal transfers. Once you know better as to what would be the resource allocation, you will know exactly what is your opportunity cost. So we allocated both 20,000 and 30,000 labor hours or such, guys, to these 4 products A, B, C, D. 4 products A, B, C, D, guys. Now, before we arrived at the transfer price as such, guys, I told you let us decide if it is viable to reduce sales of external product or not. For that, I told you better there are two alternatives. Either directly compare minimum transfer price as such, guys, by taking each product's opportunity cost into consideration, guys, or as such, guys, I can talk about computing savings per labor hour, guys, if I transfer internally and compare that with contribution per labor hour. The other division beta can procure the component at 45 rupees from the external market, considering a can procure at 125 rupees from the external market, considering a variable cost of 85 rupees to manufacture. If this component beta, if this product is internally manufactured, we are saving 40 rupees, and to save that 40 rupees you'll have to utilize 3 labor hours. So that is effectively beta saving of 13.3333 rupees per labor hour. I will have to compare that saving of 13.3333 rupees per labor hour, guys, with the contribution per labor hour of all the products. Product A beta is giving us a contribution of 6.667. Product B is giving us a contribution of 11.5. Product C and D beta are giving us contributions of more than 13.333. So undoubtedly beta, if there is spare capacity, you will want to manufacture, because the variable cost is only 85, guys, and the external market price is 125. If there is no spare capacity also beta, we will have absolutely no problem, guys, in reducing sales of product A, guys, and then manufacturing more of product D. In case beta that is also not sufficient, guys, we have no problem beta in reducing sales of product B, guys, and transferring manufacture more of D beta to transfer it. I said beta, alternatively you can also compute it like this, that is, you compare minimum transfer price beta with maximum transfer price, guys. Out of each circumstances you will know better as to what is the answer. Okay. Now, guys, 20,000 labor hours. 20,000 labor hours beta. 20,000 labor hours. Please remember beta, there is no spare capacity. There is no spare capacity at all as such beta when you're operating at a level of 20,000 hours. Understood, sir? So here, guys, here beta, the number of hours required as such, guys, to manufacture additional 2,500 units of D for internal transfers would be 2,500 units into 3 hours per unit. We would be needing 7,500 hours. How are we going to get 7,500 hours, guys? Go back to this resource allocation, guys, and check how were the hours allocated. Guys? You allocated 600 hours beta to product A. You allocated 10,000 hours to product B, guys. So the only alternative beta is the 7,500 hours beta will be generated by reducing 600 hours allocated to product A. Okay. And guys, by reducing 6,900 hours allocated to product B. You will have to reduce 6,900 कैसा है बेटा? Balance 7,500 minus 600. 7,500 minus 600 beta, those are the balance hours guys that you will have to reduce, which have been allocated to product B guys, which have been allocated to product B. Understood sir? So here beta our contribution foregone as such beta would be product A के as such beta 600 hours beta are being foregone, and that was giving us 6.66667 per hour. Product B as such guys, we have to forego 6,900 hours as such guys, and that is giving us a contribution of 11.5 rupees per hour. 11.5 rupees per hour, correct? So here beta this total contribution foregone beta would be 86,250 rupees. 86,250 rupees guys. So if you talk about the minimum transfer price beta, your contribution foregone beta or opportunity cost per unit beta would be opportunity cost per unit opportunity cost beta per unit of D. Opportunity cost per unit of D beta. We've used 86,250 rupees beta, and that is for 2,500 units. 86,250 rupees beta is a contribution foregone just to manufacture 2,500 units, so that is 34.5. So if you talk about the average transfer price as such guys, average transfer price, it would be your variable cost per unit plus the amount of opportunity cost. This is your minimum guys, minimum transfer price of course, minimum beta average transfer price. Variable cost per unit as such guys is 85 rupees, and the amount of opportunity cost beta is 34.5. Put together beta 119.5. I can say beta that the range of transfer price here guys would be 119.5 to 125. 125 is the maximum transfer price. Minimum transfer price beta should be 100. For decision making beta, let it be at the lower level. For decision making beta, let it be at the lower level, because there is no loss of contribution. There is absolutely no loss of contribution. This would be your answer guys. This would be your answer beta. 119.5 to 125, or you will simply say if they want you to mention only one transfer price beta, that is 119.5. If they want you to mention only one transfer price as such guys, that would be 119.5. 119.5. I hope you're all clear about this guys. Alternatively beta ऐसे सोचो, alternatively using 600 hours beta from A's allocation, using 600 hours beta from A's allocation, 200 units of D can be manufactured. 200 units of D beta can be manufactured. How 200 units of D as such sir? 600 hours divided by 3 hours per unit. Using 6,900 hours beta, using 6,900 hours beta from B's allocation. Using 6,900 hours beta from B's allocation, 2,300 units of D beta will be manufactured. 2,300 units of D beta will be manufactured. Okay. For 200 units beta minimum transfer prices, minimum transfer price, ये अभी मैं ऊपर भाषण में लिखा था बेटा. For 200 units beta minimum transfer price is such guys, if you have to reduce sales of A beta, minimum transfer price is 105 rupees, and by reducing sales of B as such guys, it is 119.5. 119.5. Did I make a mistake here? एक second beta. 6,900 hours into 11.5 plus 4,000. I was wondering how did we get it? Yes beta, there's a small correction beta here. 83,350. So this is 83,350. I got a doubt beta because D को अगर कम करते तो same price आ रहा है ना. If you reduce D beta, you're getting the same answer. So this is 33.34. I will add this beta 33.34. 118.34. So for 200 units beta minimum transfer price is 105 guys. For 2,300 units the minimum transfer price as such beta is 119.5. This is why I got a doubt beta. An average of 105 and 119.5 cannot be 119.5. Average transfer price, please do not take a simple average as such guys. 200 units at 105, 2,300 units at 119.5 divided by 2,500. This will undoubtedly give us 118.34. 118.34. This is your alternative way of presenting it. But I hope you've understood this, guys. Remember, guys, if you were to reduce entire B also got reduced as such, but and then you have to reduce product A, product C or D, guys. That is not going to happen. That's not going to happen. We will never reduce external sales of product C and product D. We will never reduce external sales of product C and product D as such, beta. I hope you're all clear about this, beta. Please make a note of this, guys. All of you make a note of this, beta. This is out of 20,000 hours. We still have to do, beta, what if the capacity is 30,000 hours? We still have to perform calculation, beta, when the capacity is 30,000 hours. Ensure, beta, that you write properly. आई होप यूर ऑल डन विद दिस, बेटा ये पार्ट नहीं हुआ तो पॉज करके कॉपी कर लो. यू कैन पॉज एंड कॉपी दिस गाइस. ठीक है. यस सर. वी विल पॉज एंड कॉपी दिस. Next beta is 30,000 hours, guys. 30,000 hours. If you have 30,000 hours as such, guys, remember there's a spare capacity beta of. We already have a spare capacity, guys, and that spare capacity beta is for how many hours? ऊपर जाके देखो बेटा 30,000 hours में 2,200 hours. 2,200 hours as such, guys. ठीक है. Now, guys, number of hours required beta for 2,500 unit. This you can do it with me only, guys. The number of hours required beta for 2,500 units of D, guys, is 7,500 hours. Is 7,500 hours. How are you going to get that? How are you going to get that? 2,200 hours beta we have a spare capacity. The balance 5,300 hours. Check if 5,300 hours were allocated to product A. Yes beta. Product A को beta 8,400 hours allocated थे. So up to 8,400 hours we will first reduce beta from this. Balance 5,300 hours beta reduced from product A. Reduced from product A's allocation. So guys, your opportunity cost as such beta would be the contribution foregone. Opportunity cost beta would be the contribution foregone on product A, guys. Contribution foregone on product A. How much is the amount of contribution that we are foregoing, guys? This is 5,300 hours beta multiplied by 6.66667 beta. 5,300 hours into 6.66667, guys, and that is 35,333. This is the amount of opportunity cost, guys. There's no opportunity cost on 2,000. We all know better that it is fine, guys, for us to reduce allocation of product A. We all know better that it is fine for us to reduce allocation of product A as such, guys. Opportunity cost beta per unit, guys, would be, you will divide 35,333 beta by 2,500 units. Average kara beta directly 14.133. So your minimum transfer price beta would be variable cost beta plus opportunity cost. Variable cost beta plus opportunity cost. Variable cost is 85, guys. Opportunity cost is 14.133. That is 99 beta 0.133. Maximum transfer price so beta we already know, guys, it is your external supplier price. And that external supplier price as such, guys, is 125 rupees. So यहाँ पे बेटा the range as such, guys, would become, the range of transfer price beta would become 99.133, average beta to 125. You can do the alternative approach as well beta. For 2,200 hours, in 2,200 hours beta you can manufacture 766.67 units. For that minimum transfer price beta would be 85. For the remaining units it will be 105. Average beta would be 99.133. ठीक है. I hope you all understood this question properly, guys. In case you still have any doubts, you can always ask. That's the end of this question, guys. We will now be moving on to the next question after this. Please do this, guys, quickly. Yes, guys. I hope you're all done with this. Yes, guys. I hope you're all done with this. Let us now proceed to the next question, guys. Next question is slightly different, better, slightly different from the previous one, but then it is a nice question, guys. Again, not a part of your ICI study material. If you wish to do questions similar to ICI study material question, then question 15 beta is similar to question number 14. A company has two divisions, question number 16, guys, whose activities and related costs are given below. Division A, guys, एक second beta, एक second. Yes, beta. So a company has two divisions whose activities and related costs are given below. The capacity of production is given, guys. Product X 8,000, product Y 5,000, product Z 3,000. Read each and every word carefully better in the question. Capacity of production is given as product X 8,000, product Y 5,000, product Z 3,000. Machine hours per unit are 3, 4 and 2. Selling price per unit is 480, 460 and 400. Variable cost per unit is 330, 240 and 280. The question isn't framed correctly as such, beta, but then you'll have to take only this information. Division B has a capacity to produce 3,000 units of FinY, taking input product Y beta from division A. It has also option to buy similar product as Y from the market. The cost and selling price per unit are as given below. Material cost, direct wages, variable production overheads, variable selling overhead, selling price. This is beta for division B, guys. If they take input beta from division A, then their material cost is at transfer price. Direct wages are 200. Variable production overheads are different. Variable selling overheads are different. The selling price would be 1200 rupees. If they process it with a similar product as such, beta 400 rupees is what they will be able to buy the product for. Direct wages 180. Variable production overheads 150. Variable selling overheads 110. Selling price is 1100. There is a capacity constraint of division A beta in terms of machine hour of 38,000 hours. Fixed cost of division A is 10 lakhs and that of division B beta is 5 lakhs. I want you to understand the question properly, guys. Very, very properly. यहाँ पे, guys, there's a slight difference between this and the previous question. एक तो बेटा, of course, division B का बेटा selling price is changing. Their procurement, depending on whether you're procuring it internally or whether you're procuring it from an external market. Maybe because internal procurement beta is more as per specifications, quality is guaranteed, and external में बेटा that quality is not guaranteed. So yes, guys, other factors are different here. Read the question, guys, and I'll tell you what is to be done. All of you better read the question first. सबके सब बेटा question पढ़ो बेटा पहले. All of you read the question. Please do read the question properly, guys. Do not skip this part. Question को utilize करो. Yes, guys. Chalo beta. I hope you've all read the question, guys. One thing that you have to understand better that is different about this question. Every question better. I'm trying to cover, guys, every possible variation better that they can ask in the examination. The likelihood of question number 16 coming in the examination has reduced, at least based on the previous 6 attempts, but it has reduced. But then please do not forget, guys, there has been a general conception better. This is the general mindset of the students now, that transfer pricing has become very easy. They're only asking questions on minimum transfer price, maximum transfer price, without bringing in capacity constraints, without bringing in limiting factors. My question beta is, how long will it continue? How long will they only ask questions from a specific set of questions? They will have to deviate from it, otherwise the papers will become, guys, too predictable. Every student will start scoring good marks. That is why beta, it is our job. ठीक है beta, one day before the examination, do not practice the questions wherein you do not see ICI SM, wherein you do not see RTP MTP, where you do not see the attempt. Do not practice those questions one day before the examination, guys. Not required. But those questions that are required to be practiced as such, guys, I've already marked them. Abhi ke liye beta, you will have to do all of these questions. They are important. Abhi ke liye beta, you will have to do all of these questions. They are important. Please do not forget this, guys. Okay, sir. तो यहाँ पे बेटा, when it comes to this question, guys, question number 16, the different part about this question beta is that this question has production capacity given product wise. Previous questions beta, they gave us maximum demand for each product. So here, guys, even if I want, I cannot manufacture more than 5,000 units of Y. Even if I want, I cannot manufacture more than 5,000 units of Y, guys. I know I have to transfer 3,000 units of product Y to the other division. I have to take a decision regarding internal transfer. But just in case I have spare capacity as such, guys, that does not mean I reduce allocation to product X or product Z, guys, and manufacture more of Y. Not possible, beta. होने नहीं वाला है. You cannot manufacture more units of Y. You cannot go beyond 5,000 units of Y. You cannot go beyond 8,000 units of X. You cannot go beyond 3,000 units of Z, beta. Yes, there's a limiting factor in terms of machine hours. There's also a limiting factor beta in terms of product, in terms of the number of units of each product that can be manufactured. Not just demand beta, number of units of each product that can be manufactured. That's the first part that you'll have to understand, guys. Second part beta dekhenge. They say, guys, one step at a time. One step at a time beta is to just understand this part now, not the others. One step at a time, guys. Let us just understand this part as such beta as of now. We will think about what it should be the appropriate transfer price and all of that later. समझ में आता है? आता है, sir. Let us write that, guys. Let us write as to what is the different aspect beta about this question, guys. Question number 15, guys. क्या हो गया यार? Question number 16, guys. लिखो बेटा. All of you better write down. Apart from machine hours being a limiting factor, 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 guys, there are capacity constraints. There are capacity constraints in terms of capacity constraints in terms of the number of units of each product that can be manufactured. Number of units of each product that can be manufactured. Number of units of each product that can be manufactured. Apart from machine hours being a limiting factor, guys, there is a capacity constraint in terms of the number of units of each product beta that can be manufactured. That can be manufactured. Unlike other questions, we cannot manufacture more than, we cannot manufacture better more than 5,000 units of Y, 5,000 units of Y, by reducing resource allocation of other products, by reducing the resource allocation of other products. by reducing resource allocation of other products. Unlike other questions, we cannot manufacture more than 5,000 units of Y by reducing the resource allocation, guys, of other products. Reducing the resource allocation of other products. समझ में आ रहा है? हाँ सर, समझ में आ रहा है. Now guys, before we proceed as such, guys, about the question, obviously guys, you'll have to compute contribution. We'll first decide better what is the product mix. What is the product mix, guys? Based on external demand. Based on external demand. Assume guys, assume sales will be equal to capacity. Assume beta we can sell what we produce. Assume we can sell what we produce. We can sell what we produce. So product mix we'll have to calculate as such, guys, ignoring internal transfers. I hope you've all written this paragraph, guys. So let us all start doing it beta. You'll have to compute contribution per unit. शुरू करो बेटा सब लोग. Contribution per unit से शुरू करो बेटा सब लोग फटाफट. Yes guys, start beta contribution per unit से. Computation of contribution per unit and contribution per machine hour. I just want to know better what is the resource allocation here, guys, so that we know whether we are manufacturing 5,000 units of Y or not. So that we know whether we are manufacturing 5,000 units of Y or not, guys. So here better you'll have X, Y and Z. The selling price per unit, guys, is 8,000, 5,000 and 3,000. Your variable cost per unit beta is, oh my god, that's the production capacity, guys. क्या कर रहा है राहुल? So guys, selling price per unit is 480, 460, guys, and 400. Variable cost per unit, guys, is 300 and you know guys, ऐसे देख देख के guys यहाँ पे problem आ चुका है. I thought I had a sore throat as such, guys. I thought there was some this thing. Turned out better that it was a muscle problem in the neck. Yes, it was a muscle issue better in the neck because I was turning like this and it created a sprain here. So guys, variable cost per unit is 240 better. इसको हम लोग बोलते हैं occupational hazards, guys. So this beta would give me contribution per unit. My contribution per unit beta is 150, 220 and 120. The machine hours required per unit, guys. Machine hours required per unit are 3, 4 and 2, guys. 3, 4 and 2. This would give me contribution per machine hour. 50 rupees, 55 rupees and 60 rupees. This would give me contribution per machine hour, guys, and this would give us the ranking. Ranking is 1, 2 and 3, guys. Ranking beta is 1, 2 and 3. Understood, sir? I hope we're all clear about this, guys. We now allocate those 38,000 hours beta based on maximum production capacity. I hope you're all doing it with me, guys. You're not wasting time. ये तो सब कर ही सकते हो बेटा. Computation of contribution per machine hour as such, guys, taking our selling price and variable cost into picture. I could have eliminated all of these questions as such, guys, but then ठीक है, you will be at a loss. That is why, guys, I thought let me cover few questions. I've still deleted a lot of questions, guys, from transfer pricing. A lot of questions that were there under the old syllabus, which I think are not relevant as such better. Here, guys, I hope you're all done with this. Just in case you're not done with this part, but you can pause and copy. You can pause and copy this part, guys. I'll do allocation of those 38,000 hours beta. Allocation of 38,000 machine hours. Allocation of 38,000 machine hours beta. Available is 38,000. First preference, guys. I hope you've all copied this, guys. Just in case you're not done with it, you know better that you can pause and copy. Okay. This was just computation of contribution per unit and contribution per machine hour. Even if you were not done with it, but I gave you so much time by talking continuously as such, guys, that I gave you time. Product Z beta is 3,000 units into 2 hours. 6,000 hours. Balance 32. Product Y beta is 5,000 units. So okay, guys, right now we are fully utilizing capacity of product Y. One thing is for sure, guys, 12,000 है. I will not be able to manufacture entire. Therefore, guys, if I talk about my product mix as such, beta, product mix X 4000 units, Y 5000 units, Z 6000 units, Z 3000 units. This is our product mix at present, guys. Product mix at present. At this point, I'll wait for a minute, guys. Now you know beta that if you were to transfer 2500 units, 3000 units of product Y beta to the other division, you'll have to reduce the external sales of product Y. You will have to reduce the external sales of product Y. Yes, guys. Hope you're all clear about this, guys. I gave you a lot of time. Now, guys, please understand better that there is a capacity constraint, guys, as far as product Y is concerned. And right now, better product Y, capacity of product Y, better is being fully utilized. Please understand, better, sun lo, guys. The capacity of product Y is fully utilized. Capacity of product Y, beta, is fully utilized. When we say fully utilized as such, guys, it basically means, beta, that we are not. There is no spare capacity as such, beta. Now to transfer 3000 units, of product Y, of Y, guys, to division B, we have to reduce external sales of product Y only. We have to reduce external sales of product Y. Do not be of the opinion, guys. We cannot reduce sales of product X beta to manufacture more of Y. We cannot reduce sales of X beta to manufacture more of Y. I understand, guys, product X is the least contributing product, is the least profitable product. That does not mean, guys, we reduce sales of product X to manufacture more of Y. That option beta is not available. That option beta is not available at all as such, guys. So we cannot manufacture more of Y. We cannot go beyond 5000 units. We will have to restrict our sales of product Y beta, production of product Y, to 5000 units only. Understood, sir? Absolutely no doubt. Good, guys. So this brings me to the concept of minimum transfer price beta. Minimum transfer price beta will be variable cost per unit of Y and the contribution from external sales. Won't you want to recover your contribution from external sales? Yes, sir. Of course, we will want to recover contribution from external sales. And that contribution beta from external sales, guys, that contribution from external sales is 220 rupees. Variable cost is 240. So this is 240 plus 220 beta. Minimum weight transfer price is 460 rupees. This explains the concept of minimum transfer price. Did I come to maximum transfer price? No sir, you did not. Sir, but don't you think the requirement is totally different? I will talk about requirement, you talk about this question first. You talk about the concept beta first. ये देखो बेटा सब लोग समझ में आया क्या? All of you better understand this guys first, and then beta we will talk about maximum transfer price. Then I will think about answering what is asked in the question. पहले guys we will implement whatever we have learned. Do this guys. If you're done with this, you can also try to compute maximum transfer price. Guys, I hope you're all done with this. I hope you're all done with this guys. Now if you see guys, maximum transfer price beta, it will be from the viewpoint of division B. If you see maximum transfer price beta, it will be from the viewpoint of division B. This question is different as far as that aspect is also concerned guys, because for division B beta the selling price per unit is changing, their other costs are changing guys. So I would want to know better as to what is the amount of contribution that division B is making guys, if they do not procure from us, if they procure it from the external market at 400 rupees. If they procure beta, see guys, this 400 rupees external procurement price beta will not be the maximum transfer price. 400 rupees beta, the price at which division B can procure from external market, is not the maximum transfer price. Please do not come to that conclusion, because guys, if you transfer input and if they procure it from external market, there are other factors also changing. The selling price per unit is not constant, the amount of variable selling overheads are not constant, the amount of wages are not constant. This is a very important point guys that I want you to explain. Very very important point. Maximum transfer price. Maximum transfer price as such beta will not be equal to, maximum transfer price beta is not equal to, maximum transfer price beta is not equal to your external procurement price. External procurement price. Why sir? It is not equal to 400. As other details, as other factors beta, selling price per unit, wages, variable selling overheads are also changing. So you cannot just take a decision beta based on what they are paying in the external market. Very very important. I know I'm not trying to answer the bit requirement asked as such guys, but then I'm trying to first make you understand the decision making power beta here as to what is the importance of it. So guys, as other factors are also changing as such guys, so this particular part as such beta, how will you do? How will I do beta is pay attention beta. कोई जल्दबाजी नहीं है beta. We are not in a hurry. This is not a race as such guys. This is only to ensure that you understand all of this properly. So what is the contribution per unit guys if division B procures? If division B procures Y beta from external market. If division B procures Y beta from external market. Sir, for them the selling price per unit, for them the selling price per unit guys is 1100 rupees. The selling price per unit sir for them is 1100. Okay sir. Sir, for them the variable cost per unit mein beta, product Y beta they're procuring at 400. Direct wages are 180 sir. Direct wages are 180. Variable production overheads Variable production overheads beta are 150. Variable selling overheads beta are 110. 110 guys. So if I take these details into consideration guys, 1100 minus 400 minus 180 minus 150 minus 110. 260 rupees is the contribution per unit beta that they are generating from externals if they procure beta. Now guys, please understand, if division B beta procures, if division B procures product Y beta from division A, procures Y beta from division A, the minimum contribution per unit beta that they would expect is minimum contribution per unit of fin Y, that is product division B's product beta, should remain at 260. They'll be like, boss, I am ready to pay you a price that will give me a contribution of 260 rupees. Why will they want to reduce their contribution beta that they're getting from external source? This is where beta your understanding of the concept is more important. हर एक question में पढ़े होंगे beta that maximum transfer price is the lower of net marginal revenue and external supplier price. But here beta, based on external supplier price, a lot of other factors are changing. A lot of other factors are changing. If you wish, you can write beside this question beta that maximum transfer price is not equal to your external procurement price. Is not equal to your external procurement price. Understood, sir? So guys, क्या करेंगे सर वो फिर? What will they do, sir, if they want to have a contribution of 260 rupees per unit? See guys, their selling price per unit beta would be 1200 if they procure product Y, guys. If they procure product Y, their contribution per unit as such beta should be 260. So their maximum variable cost beta, their maximum variable cost should be 1200 minus 260, sir, 940. Out of this 940, sir, they will have to incur direct wages of 200. Direct wages of 200. They will have to incur production overheads beta of 150. They will have to incur selling overheads beta of 100 rupees. 100 rupees. This balance beta would become your maximum transfer price. Maximum transfer price. A beautiful question beta to understand the concept of maximum transfer price. If they procure this product Y beta from external market as such, guys, they are anyways going to get a contribution of 260 rupees per unit. Because of us beta, if they are making a contribution of less than 260 rupees per unit beta, they will tell us, sir, please, we do not want to purchase from you. We will continue our procurement policy from external suppliers. And you will not, for that beta, we are computing. Okay, how much will they be willing to pay us? Minus 260 is 940, minus 200 beta 350 and another 100, 490. For decision making, guys, 490 is the maximum transfer price. For decision making, forget everything else as such, guys. For decision making, I have come to my conclusion beta. Minimum transfer price is 460 rupees. Maximum transfer price is 490 rupees. They will be willing to pay us 490. But guys, even if they give us 460 rupees as such, guys, even if they give us 460 rupees, they will make a higher contribution per unit. Good for them, guys. This is for decision making, guys. From the viewpoint of organization, it is very clear beta that we should not sell product Y in the external market. Instead, we should transfer it internally. That will help the company make 30 rupees more. That will help the company beta make 30 rupees more. From the viewpoint of company, it is very clear that instead of selling product Y in the external market, we should sell it internally. It will help the company beta make 3000 units into 30 rupees more. That is 90,000 rupees more beta. 90,000 rupees more. Understood, sir? ये लिखो बेटा सब लोग maximum transfer price. All of you better write this concept of maximum transfer price. I hope you have understood this. Now I will read the question, guys, and compute whatever it is. I will now read the question beta and compute. If you better please copy this. I hope you've understood the concept of maximum transfer price. I hope you're all done. I hope you're all done with this. Here better this part now. Yes, better. Yes, guys, keep copying. Keep copying, guys. Yes, guys. Chalo beta. I think I have given you a lot of time and such, guys. I think I've given you a lot of time, okay? Yes, sir. This was all about decision making, guys. Minimum transfer price, maximum transfer price, whether it is actually required in the question or not. I had no idea, guys, but then I had to present you guys as to what is from the viewpoint of decision making. From the viewpoint of company, guys. From the viewpoint of company. From the viewpoint of company. We should transfer 3000 units. we should transfer 3000 units of Y to division B. To division B. The requirement is only 3000 units, guys. Understood, sir? Now, guys, let us look at the first requirement, guys. Let us all look at the first requirement, guys. What is that they're expecting from us? Calculate profitability of the company, guys, if transfer price of Y from division A to division B is fixed at 400 rupees, guys, on the basis of market price of similar products. Give comments of fixing of transfer price based on market price. यहाँ पे comment में अपन लिख लेंगे बेटा that this is not the correct mark, that is this is not the correct basis of fixing of transfer price. Division A is at a loss if transfer price is fixed at 400 rupees because their opportunity cost as such beta is not being fully recovered. And division B beta is being given an unfavorable advantage. Anyways beta, ठीक है, यहाँ पे division A's profit will be low, division B's profit will be more as such, guys, but then the decision is still from the viewpoint of company. They did not ask us anything else as such beta here. First bit, guys, it is only profitability statement, guys. Profitability statement, guys, if the transfer price is fixed at 400 rupees. Profitability statement, guys, if transfer price is fixed at 400. Transfer price is such beta is fixed at 400 rupees. Transfer price is fixed at 400 rupees. ठीक है, sir. Now let us talk about division A, guys. Let us all talk about division A. As far as division A is concerned, बेटा क्या रहेगा यहाँ पे? There is product X, Y, Z. Product X के बेटा external sales. There is only external sales. Product Y बेटा there is both external sales बेटा and internal transfers. Product Z beta is external sales. Product Z, guys, is external sales. The selling price per unit, guys, it is 480, 460. Internal transfers 400, 400. Variable cost per unit is 330, 240, 240, 280. The amount of contribution per unit is 150, 220, 160, 120. You talk about total contribution as such, guys, here. Total contribution, beta. अच्छा, number of units तो लिखा ही नहीं बेटा मैं. Number of units. External sales, beta, how much are we selling in the external market? We did product allocation, no? 4,000 units, guys. 4,000 units. External sales will only be 2,000. Internal transfers 3,000. Product Z beta external sales, guys, would be 3,000. 3,000. So if you multiply them, guys, you'll get 6 lakhs. 4,40,000, 4,80,000, 3,60,000. All of this put together, beta, would give me 3.6 plus 4.4 is 8, 8 plus 6 is 14, 14 plus 4.8 is 18.8 lakhs. This will be my total contribution, guys. From that, I will deduct the amount of fixed cost, and the amount of fixed cost beta that we're incurring is 10 lakh rupees. So this would give us the amount of profit that division A is making, 8.8 lakhs. This would give us the amount of profit beta that division A is making, 8.8 lakhs. I don't think beta there should be any problem in understanding this. Of course beta division A is at a loss because the internal transfers beta are not at the correct price, and this is an undue advantage beta being given to division B here. But this is the profitability statement, guys, of division A. There should not be any doubt in it. Please make a note of it, guys. All of you beta make a note of it. Thank you, sir. Make a note of it, guys. Yes, beta, do make a note of it. इसके बाद में we'll have to prepare division B's profitability statement as well, guys. हियो बेटा, फटाफट करो. Yes, guys, I hope you're all clear about this. Okay. Yes, sir. Now, Division B profitability, guys. Division B, guys. Remember, the sales are only 3,000 units, beta. The selling price per unit, beta, will be 1,200. As input is as Y beta is procured from Division A. As Y beta is procured from Division A. The variable cost per unit, guys. Question actually to है बहुत अच्छा बेटा, but then they've restricted it a lot. Your product Y beta transfer price is 400. Transfer price beta is only 400, whereas bare minimum transfer price should have been 460 rupees. Wages beta are 200. Production overheads beta. Production overheads are 100. Sorry, 150. Selling overheads are 100. So all of this beta would give us a contribution of 1200, 400, 200 guys, 600 वो है 700, 850, 350 rupees. The output as such guys is 3000 units. So this beta would give us a total contribution of 10 lakh 50,000. 350 into 3000. Correct beta. The amount of fixed cost that we are incurring as such guys is 5 lakh rupees. So the profit that we would be making beta is 5.5 lakhs. Did he ask us only profitability of divisions? No, profit of the company guys. The profit of the company beta, you can add the profits made by division A and division B guys. Division A beta is making a profit of 8.8 lakhs. Division B is making a profit of 5.5 lakhs, 14.3 lakhs. This would be the profit of the entire company. Simple question guys. ये तो तुम लोग भी कर चुके होंगे guys. Verify the answers. Division B beta. Yes guys, do check this. Yes guys, please check the answers बेटा. हो गया क्या बेटा सबका? I hope you're all done with this guys. Now guys, this was about the answer to the first bit. Second bit क्या बोल रहा है बेटा वो? Give comments on the transfer pricing policy. Comment on fixing transfer price based on market price. Not at all appropriate guys. Not at all appropriate. Please understand guys. Please understand beta. Division A beta has to transfer. Division A has to transfer product Y. Division A beta has to transfer product Y beta by reducing external sales. By reducing external sales guys. Based on opportunity cost. Based on opportunity cost beta. The minimum transfer price should be. The minimum transfer price beta should be the external price. Should be the selling price of product Y beta, that is 460 rupees. 460 rupees beta should be the minimum transfer price. Transferring at 400 beta reduces the profits of division X. Sorry beta, reduces the profits of division A guys and increases the profits of division B. Increases the profits of division B guys. I hope you're all understanding this beta. Please make a note of it. ये comment copy करो बेटा. ये अपन already discuss कर चुके हैं बेटा. We've already spoken about this guys. You just have to copy this comment now and nothing else. And then we will answer the third bit guys. We will answer the third bit guys after that. Compute the profitability. Yes guys, I hope you're all done with this. Chalo beta. Third bit guys, it says that division B guys. Third bit guys, calculate the impact on profitability if the capacity of division B beta is enhanced to 5000 units. It is enhanced to 5000 units by making a capital expenditure of 6 lakhs at a 15% cost of capital, and the transfer price is the true market price, that is 460 rupees. 460 rupees. ठीक है बेटा. ठीक है, they're transferring it internal. As long as the decision is to transfer it internally as such beta, we know that the profitability, it is an optimum decision. It's an optimum decision. We will now recompute profitability guys. We will now recompute profitability as such guys. 290 रुपीज़ आएंगे बेटा. एडिशनल 2000 यूनिट्स है. ये डिवीजन तो उतना ही कमाएगा. 5,80,000 minus 6 lakhs. The profits beta should increase by 4,90,000 rupees. Let us see beta. The profits according to me beta should increase by 4,90,000 rupees. Let us see, guys. Internal transfers, everyone can start doing it with me beta. 5,000 units of Y at 460 rupees. 460 rupees, guys. Now profitability of division A. Profitability beta of division A, guys. Product X, Y and Z. External sales. The output, guys, is only 4,000 units. Internal transfers 5,000 units. External sales, guys, of Z is 3,000, right? Yes. Selling price per unit is 480, 460, 400. Variable cost per unit is 330, 240, 280. Contribution per unit is 150, 220, 120. Total contribution as such, guys, is 150 into 4,000 beta 6 lakhs. 220 into 5,000 is 11 lakhs. 120 into that beta is 3,60,000. 20.6 lakhs. Remember, their fixed cost is not increasing, but their fixed cost will remain at 10 lakh rupees only. So yes, the profit that division A beta makes is 10.6 lakh rupees. I hope you're all doing it beta. Internal transfers of 5,000 units beta at a price of 460 rupees. Based on that beta, the profit that division A beta is making is 10.6 lakhs. 10.6 lakhs. You'll have to recompute profitability of division B as well, guys. तुम लोग करते जाओ beta. Do not wait for me. Do not wait for me, guys. You guys continue. That selling price per unit, guys, is undoubtedly 1,200 less. Variable cost per unit beta product wise 460. Direct wages are 200. Production overheads are 150, guys. Selling overheads are 100, guys. The amount of contribution per unit, guys, is 290. Do not forget beta that the volume is 5,000 units. Total contribution, guys, is 5,000 into 290, guys, 14.5 lakhs. The amount of their fixed cost as such beta is, the amount of fixed cost beta is 5 lakh rupees. Increase in fixed cost beta is it is 8,60,000. Guys, one important thing beta that I want you to understand is, one important thing beta is that depreciation has not been considered. Depreciation, guys, has not been considered. Why, sir? We did not consider depreciation, guys, as useful life is not given. As useful life beta is not given. Because they did not give us the amount of useful life as such beta, we are not taking depreciation of that 6 lakh rupees. If you see beta total profit of the company, total profit of the company beta here would be, first division is making 10.6 lakhs beta and this is making 8.6 lakhs, so that should be 19 lakh 20,000. If you see, guys, increase in profit, you can directly compare with profit under division 1, guys, as long as the transfers are made internally as such beta. As long as the transfers are made internally, guys, it does not matter. Profit of the company would remain same, 4,90,000. This would be the increase in profit. Understood, sir? Please make a note of this, guys. I'm going to wait for 2 minutes and I'll also present you an alternative way of doing this. I'll show you an alternative way of doing this as such beta. तुम लोग ये कॉपी करना शुरू करो, सब लोग शुरू करो, guys. यस बेटा, आई होप यू वर ऑल डूइंग इट, यूर ऑल डन विद डिवीजन ए. नहीं हुआ तो ये पॉज करके कॉपी कर लो. दिस इज डिवीजन बी's प्रॉफिट गाइस. Yes guys, I hope you're all clear about this. चेक करो बेटा, ये हो गया क्या फटाफट? Yes guys, I hope you're all done with this. I hope you're all done with this बेटा. Now guys, understand guys, just for our understanding, only for understanding guys. क्या है सर ये? Only for understanding guys. 1 second बेटा. Yes guys. हाँ बेटा. Only for understanding purpose guys, please understand guys. Transferring at 460 guys, so there is no impact on profit of division X, no impact on profit of division X. Just for our understanding guys. Division Y, sorry, division A beta, no impact on profits of division A guys. Output is same guys. Only the output of division B is increasing. Only the output bit of division B is increasing. Yes or no? The contribution per unit bit of division B is, the contribution per unit bit of division B is 290 rupees. This is over and above the contribution of division A. वो ठीक है, वो पूरा recover हो रहा है बेटा. Everything is being recovered guys, but the contribution per unit of division B beta is 290. So the incremental contribution beta that division B would make, the incremental contribution of division B, they are going to sell 2000 more units as such guys, and every unit will give them a contribution of 290 rupees, so that is 5,80,000. And their incremental cost beta is on that 6 lakhs, they will have to incur a cost of capital of 15%. That is 90,000 rupees. So their incremental profit beta would be 4,90,000. That's it. This is how you present. Only for understanding purpose बेटा, एग्जाम में प्रेफरेबली वो पूरा करो. ये देखो guys, see guys, it doesn't matter guys, what is the transfer price बेटा will have no impact on the profitability of the company as long as the output is not changing. ठीक है. So whether they were transferring earlier at 400 rupees or 460 rupees does not matter, guys. But here, beta, we're actually seeing an increase in output from 3,000 units to 5,000 units. Whatever profits are being made by division A as such, guys, he's still making that, because whether in the external market or internal transfers, he's making 460 rupees. But apart from that, beta, division B will additionally realize 290 rupees per unit from every unit, beta, from every unit manufactured there. So that profit, beta, is coming up to 5,80,000. Incremental fixed cost 90,000. Incremental profit 4,90,000. As simple as this, guys. Chalo beta, copy karo, and then we'll start question number 17. We'll start question number 17, guys, after this. I hope you're all doing this, guys. I hope you're all doing this. I hope there's no doubt in all of this, beta. समझ में आ रहा ना सबको? Hello, guys, let us now start the next question, guys. Next question, but in case you're not done with it, you know better what is to be done. Hit the pause button, guys. Question number 17. Do not forget, beta, to be a part of the Telegram group as such, guys. I've already told you, beta, that at the beginning of the classes, it will be available, beta, as CA final by Rahul Jain on the Telegram as such, beta. There's a group, and then, guys, there's a YouTube channel in the name of Rahul C Academy as such, guys. If there are any new videos to be uploaded as such, beta, I'll upload it there. Plus, there'll also be another medium as such, guys, that I will update you by the end of these classes. So, question number 17, beta, now. Division X and Y are two divisions in X5 Limited. Division X manufactures a component X which is sold to external customers and also to Division Y. The details of Division X are as follows. Market price per component is 300 rupees. Variable cost per component is 157. Fixed cost is 20,60,000. Demand from Y division per production period is 20,000 components. Capacity per production period is 35,000 units. Details of division Y, guys. Each unit of Y requires 2 units of X. Selling price per unit, beta, is 1,200 rupees. You need 2 components of X, beta, 2 units at transfer price. Other variable costs are 375. Fixed cost per production period is 13,50,000. Demand per production period, beta, is 10,000 units. Capacity is 10,000. The group transfer pricing stipulates, beta, the transfers must be at opportunity cost. Transfers must be at opportunity cost. Y must buy the components from X. Option nahi de raha hai, beta. And X must satisfy the demand from Y, beta, before making external sales. This transfer pricing policy is very important, beta. All the transfers will be at opportunity cost. When they say, beta, transfers will be at opportunity cost, it will be at minimum transfer price. If there is no external demand, beta, out of spare capacity, it will be at variable cost. If it is by reducing external sales, it will be variable cost, beta, plus contribution foregone. Present figures showing the weighted average transfer price per component transferred to Y and the total profits earned by X for each of the following levels of external demand of X. This is the external demand as such, beta. Compute division wise profit, beta, when division X has each of the above levels of demand. And again, beta, calculate the profit for each division, guys, if the external demand per period for the components that are made by division X, guys, is 15,000, 19,000, 35,000. Calculate the financial impact on the group if division Y ignored the transfer pricing policy, guys, and purchased all of the 20,000 components it needed from an external supplier to at 255 rupees. You must answer, guys, at each of the three levels. Question thoda bada hai, guys, वापस, but then it's a nice question, again based on opportunity cost only. So why did you zoom in? For you to read the question, guys. For you to read the question, so that I will again read the question, guys, and explain it to you. I will be again reading the question, guys, and explaining it to you. Do read the question properly as such, guys. Read the question properly, but understand each and every part of it. Then we will be solving it, guys. Yes, guys. कॉपी करो बेटा सब लोग ये. Yes, guys. I hope you're all reading the question, or you've already read the question. I'm going to wait for a minute more. Hello, guys. I hope you're all done with this. Yes, sir. We are all done with this. We will do the first bit, guys. Remember the most important part of the question, guys. I will slowly discuss the entire question again, guys. Please do not worry about it. So a very important part of this question, beta, is understanding the fact that the transfer pricing policy states what? Your transfer pricing policy, beta, here क्या बोलता है? Transfer pricing policy states, beta, that it is a must, beta, to transfer internally, and transfer price should be based on opportunity cost. When they say it should be based on opportunity cost as such, guys, transfer price, beta, will be equal to minimum transfer price. Transfer price, beta, should be equal to minimum transfer price whenever they say it should be based on opportunity cost. So it would be, beta, variable cost per unit if transfers are out of spare capacity. If transfers are out of spare capacity, and it will be equal to variable cost per unit, sir, plus contribution foregone, opportunity cost, if ट्रांसफर्स आर बाय रिड्यूसिंग एक्सटर्नल सेल्स, ट्रांसफर्स बेटा आर बाय रिड्यूसिंग एक्सटर्नल सेल्स. ये तो पता ही है सर हमारे को, आप हर एक क्वेश्चन में मत लिखा हो ऐसा. Just telling you guys that this is a transfer pricing policy, guys. Transfer pricing policy. We are only thinking from the viewpoint of division X better. First bit, guys, is to compute the profits earned by division X, guys. Division X. When the external demand is 15,000 units, 19,000 units, and 35,000 units, also arrive at an average transfer price. Also arrive at an average transfer price. Shouldn't be difficult as such, guys. I really do not care better about decision making here. तो यहाँ पे बेटा decision making is not there बेटा, whether it is viable from the viewpoint of company or not, guys. No one cares about it, guys. No one cares about it, guys. What is important बेटा is whether yes you will transfer internally. See guys, I'm telling you again बेटा, whether the decision is from the viewpoint of company or not, guys, absolutely not relevant. Just price the product बेटा equal to minimum transfer price and get done with it. Just price the product बेटा equal to minimum transfer price बेटा and get done with it. Yes sir, we are understanding it. We are understanding it, sir. So let us do it better now. Let us start doing it. ये लिख लिया ना बेटा सब लोग. I hope you're all doing it with me only, guys. Division X बेटा first. Division X. Capacity, guys, is 35,000 units. Capacity is 35,000 units. Internal transfers required as such बेटा are 20,000 units. Internal transfers that are required are 20,000 units, guys. Capacity is 35,000 units. I hope you've written the first line, guys, that it is a must to transfer internally, and transfer price better should be based on opportunity cost. After that, I'm telling you whether the transfer price should be equal to your minimum transfer price, which is variable cost per unit, guys, if transfers are out of spare capacity, and variable cost better plus contribution foregone if transfers are by reducing external sales. By reducing external sales. Your variable cost per unit, guys, is 157. Selling price per unit beta is 300. Contribution per unit beta from external sales is 143. Contribution from per unit beta from external sales is 143 rupees. 143. I'm assuming कि सब लोग ये लिखे बेटा ट्रांसफर प्राइसिंग पॉलिसी फर्स्ट. यस सर. अभी ये देखो guys, at what price will you transfer beta will all depend on guys what is the amount of spare capacity that you have. That is why beta there are three cases given here. Case 1, guys, when external demand is 15,000 units. Case 1 beta, when external demand beta is 15,000 units. So when the external demand is 15,000 units beta, remember your spare capacity beta is 20,000 units. Spare capacity beta is 20,000 units. So the entire requirement, guys, of division Y will be met out of spare capacity. Will be met out of spare capacity, guys. The entire requirement of division Y beta will be met out of spare capacity, guys. So transfer price beta will be equal to variable cost per unit, which is equal to 157. 157. करना है बेटा अपन को. We are not going to stop. Remember, we are just doing repetitive questions, guys. All of them are the same thing as such, guys. ये तो और भी simple है. This is even more simple, guys. Case 2, guys, if external demand is 19,000 units. 19,000 units. So your spare capacity as such beta is going to be, spare capacity, guys, is going to be 16,000 units. So your internal transfers beta, internal transfers of 20,000 units hai. 16,000 units beta will be, 16,000 units as such beta will be out of spare capacity. Will be out of spare capacity. And that beta would be at 157 rupees per unit. 4,000 units beta will be by reducing, 4,000 units beta by reducing external sales. By reducing external sales. And that beta would be at 300 rupees. That beta would be at 300 rupees. Understood, sir? Case 3, guys. External demand is 35,000 units beta. There is no spare capacity. अरे यार, I'm so sorry beta. I have to write average transfer price also. So यहाँ पे beta my average transfer price as such, guys, would be 16,000 units at 157. 4,000 units beta at 300. Divided by 20,000 units. 4,000 into 300. 16,000 into 157. divided by 20,000 units. 185.6 rupees. This would be my average transfer price, guys, when the external demand is 19,000 units. Case 3. When external demand beta is 35,000 units. When external demand beta is 35,000 units. There is no spare capacity at all. There is no spare capacity. Entire internal transfer of 20,000 units. Entire internal transfer beta of 20,000 units will be by reducing external sales. And the transfer price of such beta would be 300 rupees per unit. Transfer price beta would be 300 per unit. So with this, guys, I've got the average transfer price per component, guys, under each of the three cases. I hope you've all understood this, guys. ये देखो बेटा, I'll slowly scroll down as such बेटा, wait for a minute so that you finish it, and then we will do the profitability part collectively. Simple है बेटा, I'm just saying बेटा as to are you transferring out of spare capacity or are you transferring better by reducing external sales? If you are transferring better by reducing external sales, transfer price better should be 300 rupees per unit. And if you are transferring better out of spare capacity, transfer price should be 157. ठीक है? Yes sir. ये कॉपी करो बेटा. All of you guys copy this. Here guys. Are we all clear about this guys? I hope you're all done with case 1. I hope सबका case 1 हो चुका है बेटा. ये सब लिखे हो तुम लोग. Here guys. Here बेटा. I hope you're all done with this. Check करो बेटा. Yes, guys, I hope you're all done with this. Now let us compute profitability statements, guys, based on these prices. First beta is profit of division X. Profits of division X beta. So there are three cases, guys. Case 1, case 2, case 3. External sales beta are being restricted to external sales as such beta are being restricted to 15,000 units only, guys. 15,000 units at 300. This is not going to change, guys. 15,000 units at 300. Yes, boss. At 300. Internal transfers, guys. Case 1 beta external demand is only 15,000 units. So internal transfers were 20,000 units but at 157. No contribution being made. Second case beta is 20,000 units at an average transfer price of 185.6. Correct? Yes, sir. This is where beta the external demand, guys. Remember beta the external demand. We are not catering to the entire external demand beta. External demand beta is 15,000 units. Here it was 19,000 units and here it was 35,000 units. So here, guys, you're transferring the entire 20,000 units but at 300 rupees. At 300 rupees. Basically beta whatever contribution, guys, that division X is making was only because they have an external demand, guys. Is only because they have an external demand. Contribution, guys. Contribution from external sales and internal transfers. From external sales and internal transfers. This is 15,000, guys, into 300 minus 157. This is 20,000, guys, into 157 minus 157. All of this beta would give us a contribution of 143 into 15,000, guys, is 21 lakhs 45,000. And here, guys, it is 15,000 into 300 minus 157. 20,000 into 185.6 minus 157. This should be 19,000 units beta into 143. 27 lakh 17,000. And this beta should be 15,000 into 300 minus 157. 20,000, guys, into 300 minus 157. So this beta would be 35,000 units into 143. 50 lakhs 5,000. Less the amount of fixed cost beta that they're incurring, which is 20 lakh 62,000. 20 lakh 62,000, guys, in all the cases. Doesn't make a difference beta, irrespective of the amount of volume that you are operating beta, that will remain constant. $83,000. This is the amount of profit, guys. Understood, sir. These are the profits of division X, guys. I hope you were all able to do this, guys. Kuch nahi hai beta, we've already computed transfer price. You're just multiplying demand beta with the amount of contribution per unit, and you're comparing total contribution with the amount of fixed cost to arrive at the amount of profit. It would be really great beta if you do these questions, guys. If you do these questions on your own beta. If you're done with this, beta, please compute profits of division Y. Just in case you're done with this, beta, start computing the profits of division Y, guys. Yes, guys, I gave you a lot of time, guys. Now let us compute profits of division Y, beta. Profits of division Y, guys. कर लेते हैं सर profits of division Y भी. Profits of division Y, guys. I'll take all the 2-3 cases, guys. Remember, guys, their external demand as such beta is 10,000 units. Their external demand beta is 10,000 units. Yes, and they need 2 units as such beta. They need 2 units. Their selling price per unit beta is 1200. 1200 less 2 components of X. 2 components of X. So this would be 2 into case 1 beta transfer price is 157. 2 into 157, 314. 2 into 185.6. And that is 371.2. 2 into 300, guys. So that is 600 rupees. Other variable cost beta per unit is 375. 375. 375. So the amount of contribution per unit, guys, would be 1200 minus 314 minus 375, 511. 1200 minus 371.2 minus 375, 453.8. 1200 minus 600 minus 375 is 225. If you look at the total contribution beta that these guys are making, 511 beta into 10,000, guys, is 51 lakhs 10,000. 51 lakhs 10,000. This is 45 lakhs 38,000, and this is 22 lakhs 50,000. You will reduce the amount of fixed cost beta that they're incurring. That is 13 lakhs 50,000 under each of these scenarios. That does not change. That beta would give us the amount of profit. So how simple is this? Please do not forget beta, we need 2 units of component X. एक unit का price मत लेना. Do not take price of 1 unit, guys. It is 2 units. So that is 37 lakhs 60,000. 45 38 minus 1350, 31 lakhs 88,000. 22 lakhs 50,000, and it's 9 lakhs. These are the amounts of profits, guys. These are the amounts of profits. If you want overall profit of the company, guys, overall profit of the company, sir, is that going to change? Nahi beta. I'll prove it to you. 3760 plus 83 is 38 lakhs 43,000. 3188 plus 655. 38 lakhs 43,000. It is not going to change, guys. 38 lakhs 43,000. There is no impact on external output. There is no impact on external output, guys. External output is still remaining same. Only transfer price is changing. Only transfer price is changing, guys. See, if the external output is changing better, then all of this is going to change. Otherwise, nahi. ठीक है? Yes, sir. This is the very first thing that I explained you better in the first class of transfer pricing. That as long as the output that is being sold to the external parties as such better is not changing, transfer price better will not have any impact on the overall profitability. If the output that you're purchasing from outsiders or selling it to outsiders better, transactions with outsiders are changing, then the profits will change. यहाँ पे only divisional profits will change, guys. Understood, sir? Please write this, guys. Write this better. All of you copy this. I hope you've all understood this, guys. This is the profitability of Division Y. We're going to wait for 2 minutes. Answer the second bit, guys, now. I mean, November 2014 ka second bit, guys. Same question came in 2 attempts, but May 2014 and November 2014 with slightly different requirements. With slightly different requirements, guys. चेक करो बेटा सब लोग आया कि नहीं आया सबको सेम आंसर Please check, guys. All of you better arrive at this contribution per unit, total contribution and profitability. चेक करो बेटा here, guys. think I gave you a lot of time, guys. ठीक है? Yes, sir, we are good to go. Just in case you're not done, beta, you can pause the video. Just in case you're not done, beta, you can pause the video. Understood, understood, sir. Now, guys, we are done with May 2014 के दोनों requirements, guys. In November 2014, beta, November 2014 question, guys. Now, requirement 1, beta, calculate the profit made for each division, guys. Done with that, beta. It's same as the above requirement for all those, beta, who think that the same questions cannot be repeated. Second bit, beta, is calculate the financial impact on the group if division Y ignored the transfer pricing policy and purchased all of the 20,000 components that it needs from an external supplier for rupees 255 each. Your answer must consider the impact at each of the three levels, beta, from the external. So here it is telling us, beta, that there's an external supplier willing to supply us at 255 rupees, and we will have to consider the financial impact of that, guys. So November 2014, guys. November 2014, requirement 1, same as May 2014, same as May 2014 question. Okay. Now November 2014 ka requirement 2, guys. Requirement 2. That is financial impact. Financial impact if division Y procures, all 20,000 units, from external market at 255 rupees. Division Y, beta, is procuring all of those 20,000 units, guys, from an external market at 255 rupees. So what would be the financial impact of all of this? What would be the financial impact, guys, of this? सर आप बोलोगे या हम करेंगे? मैं करूँ क्या बेटा? तुम्हारे ये लिखना है तो लिख लो, guys, one line. You write this, guys, so that I will do it. You guys are experts in it, beta. We always know what is to be done. He gave us external supplier price. We will compare minimum transfer price with maximum transfer price, and we will write the answer. Of course, sir, we will. Chalo, guys, now let us proceed. Please understand, guys. First, guys, forget all of the question, guys. I would want to compare minimum transfer price beta with maximum transfer price. Okay. Please understand, guys. If transfers are made out of spare capacity, guys, out of spare capacity, minimum transfer price beta is equal to variable cost, and that is 157. Maximum transfer price as such, guys, maximum transfer price beta is equal to external supplier price. I know, beta, that you're supposed to write lower of net marginal revenue, sir, and that, but net marginal revenue is undoubtedly higher, beta, than 255 rupees. Much higher, guys. Much higher, beta. तो यहाँ पे, guys, यहाँ पे, beta, it is beneficial to transfer internally. It is beneficial, beta, to transfer internally. Yes or no? तो यहाँ पे, beta, if transfers are made out of spare capacity as such, guys, minimum transfer price, beta, is 157. Maximum, yeah, I hope, beta, you've written this. Okay. Maximum transfer price, beta, will be 255. It is beneficial to transfer internally. If division Y is procuring from external market, if division Y, beta, is procuring from external market, company as a whole, beta, will lose. 255 minus 157, beta, 98 rupees per unit. 255 minus 157. Correct, sir? Correct. Likewise, beta, if transfers are made by reducing external sales, yes or no, beta, then I will talk about the financial impact. By reducing external sales, Your minimum transfer price, beta, should be variable cost plus contribution, that is 300. Maximum transfer price, beta, is 255. Internal transfers should not be made. Internal transfers should not be made, guys. Should not be made. Yes or no? Yes, sir. If division Y is procuring from external market, if division Y beta is still procuring from external market, then we are saving, guys. Is procuring from external market. Company as a whole beta will save 45 rupees. Company as a whole beta will save 45 rupees. जो लोग अभी नहीं कर रहे थे बेटा, कंपनी एज अ होल बेटा विल सेव 45 रुपीज. दिस वाज नॉट हैपनिंग एट प्रेजेंट बेटा. विल सेव 45 rupees per unit. Company was not saving such amount beta existing. Company was not saving 45 rupees at present. Why was it not saving 45 rupees, sir, at present? As all transfers were made internally. As all transfers beta were made internally. As all transfers beta were, as all 20,000 units beta were transferred. ये जो 45 rupees saving है बेटा, the company was not making this at present. They are like, I do not care about what is the external supplier price. We will transfer internally. We will transfer at 300 rupees. This is what was happening, guys, which is not correct. Which is not correct. Yes, sir. तो ये लिखो बेटा. This is now using this information, guys. You will summarize in all of those three cases. What if the demand is 15,000 units? What if the demand is 19,000 units? What if the demand is 35,000 units? We will write, guys, as to what is the amount of additional cost that we are incurring, or what is the amount of savings that is happening better because of procuring from external market. Understood, sir? Understood, sir. Please write this, guys. All of you beta, please write this. First beta, write this. I'm telling you beta as to what is the impact of division wise procuring from external market when you have a scope beta of transferring it internally. Please write this, guys. Hope you're all writing this, you're done with this बेटा. ये देखो अभी. Yes बेटा, please write this guys quickly. I'll wait for 1 more minute. Yes बेटा, I hope you're all done with this. ठीक है. Now guys, let us consider the impact guys. Let us consider the impact. Okay, in all the three cases. Financial impact बेटा. Financial impact. If division Y procures from external market. Procures better from external market. We are going as per the current transfer pricing policy guys, right? Please understand guys. Basically this is in comparison to transfer pricing policy. In comparison better with transfer pricing policy. Transfer pricing policy. Where better transfers should be made internally only. Transfers better should be made internally. Should be made to other division. We are going better as per the policy of the company. Understood sir, that we are going as per the policy of the company. So what am I going to write here better? Three cases. If external demand better, if external demand for division X, if external demand is such better for division for product X is 15,000, 19,000 and 35,000. 35,000. If internal transfers were made, if internal transfers were made, if internal transfers were made guys, out of spare, if internal transfers were made, if internal transfers were made guys, out of spare capacity 20,000, 16,000 and nothing, by reducing external sales. By reducing external sales as such guys, they would have made a transfer of 4,000 units and here 20,000 units. If internal transfers were made guys, out of spare capacity as such, but it would have been 20,000 guys, 16,000 guys, and by reducing external sales better balance 4,000 and 20,000. If internal transfers were made, remember guys, it is important to understand if internal transfers were made. ठीक है. Now what is the financial impact guys? Financial impact. So what is the loss beta? Loss. This will arise better. See, this loss as such better will arise because units are not transferred internally out of spare capacity. As units are not transferred out of spare capacity. Units are not transferred out of spare capacity. If you had spare capacity beta, you should have utilized it as such guys and transferred units internally. तो यहाँ पे beta per unit we will be incurring a loss of 98 rupees. Per unit beta we will be incurring a loss of 98 guys. Here 16,000 into 98, no loss beta here. Savings are not transferred out of spare capacity guys. Here beta, as units are not transferred by reducing external sales. So because of this, what is the by reducing external sales? So what is the amount that we are saving guys? This is the right thing beta that should have been done. 4,000 guys into per unit beta, it is 45 rupees. Here on entire 20,000 units, 45. So if you see guys, in the first case beta, there is a loss. 19,60,000 is loss beta, loss. Second case also beta, there is a loss, only 16,000 into 98, 15,68,000. 15,68,000 minus 1,88,000. So there is a net loss beta of, this is also loss beta, because they purchased it from outside. They shouldn't have done it guys. This is savings guys. 9 lakhs is savings. Division Y beta, in the first case beta, should not have procured from external market. In spite of that beta, they did. Company as a whole beta is losing 19 lakh 60. In the second case beta, division Y should have procured only 4,000 units from the external market. Because of that, we would have saved 1 lakh 80, but then they procured entire 20,000 units. I hope you're all understanding this guys. This is the answer guys. Please make a note of it guys, and then we'll start the next question. All of you beta, I'm assuming that you're all done with this. अब ये कॉपी करो बेटा सब लोग. We are done with the question बेटा. We are done with the question. Yes, guys, I hope you're all done with this. Yes, guys, I hope you're all done with this. Let us now go proceed to the next question, better. And that is question number. We will do what? All the questions are big only, but I answer sub bade ye beta. It is not that the questions are small. All the questions are going to take a little time, guys. We'll solve question number 18 only, beta, in the order. Laga to baad mein. We will continue in the next class. Okay. Yes, sir. There are 4 products PQRS produced by a profit center division A. Each product is sold in the external market also. Data for the period are as follows. Market price per unit of PQRS is 70, 69, 56, 46. Variable cost of production per unit beta is 66, 59, 36 and 37. Labor hours per unit is 3223. Specific fixed cost beta per 10,000 units of product is 2,500, 12,600, 15,000, 18,000. So, sir, should we stop at this point? Are you going to say something? Yes, but I'm going to add something here. We take decisions on the basis of contribution per labor hour, guys, only if there is no specific fixed cost. Only if there is no specific fixed cost is such better. यहाँ पे guys there is specific fixed cost. So I obviously cannot directly take decision beta on the basis of contribution per labor hour. Contribution per labor hour. But I am going to tell you better detailed answer. Do not worry. We will take contribution net of specific fixed cost beta from every 10,000 units. We will take contribution beta net of specific fixed cost as such, guys, for every 10,000 units. And then see, guys, as to what is the ranking of the products. Product S can be transferred to division B, but the maximum quantity that might be required for transfer is 20,000 units of S. The maximum quantity beta that they might need is only 20,000 units of S. Dhyan dena beta, all the questions are interesting, all the questions are good, guys, all the questions are important. The specific fixed cost given above, this is not an ICI question, guys. This is not mentioned anywhere in the materials. I'm still doing them better because I consider them as relevant. The specific fixed costs that are avoidable if a product is not made, they are incurred for every 20,000 units. The maximum sales in the external market, guys, are 30,000, 31,000, 28,000 and 18,000 units. Division B can purchase the same product at a slightly cheaper price of 45 rupees per unit. Product S beta division B can purchase at 45 rupees instead of receiving transfers of product S from division A without any extra transport or inspection cost. B can also take partial supplies from A. So yes beta, you have an option of supplying it partially. Even this beta, we assume it anyways. The total labor hours are limited to 1,92,000 hours. The total labor hours are limited to 1,92,000 hours. What is A's optimum product mix and the corresponding contribution net of specific fixed cost? How many units should A transfer to B and at what price? Is it in the company's interest to transfer 20,000 units of S to B? We will be taking all of these decisions, guys, now. We would be taking all of these decisions, guys, now. But first, guys, I told you whenever you have a limiting factor as such, guys, and you also have an option to transfer internally as such, beta, we ignore the fact beta that we have to transfer internally. We ignore the fact beta that we have to transfer internally as such, guys. We only take external sales first and then decide what should be the resource allocation beta first, and then beta we will see what is our opportunity cost. So guys, in this question also as such, guys, first we will be doing the same thing that we did in all other questions. We will be deciding as to what should be the internal resource allocation beta. What should be the resource allocation, guys, when it comes to external sales, ignoring, guys, internal transfers. Every question beta we do this. We do this only to know beta as to what exactly is our opportunity cost. What exactly beta is our opportunity cost. Yes, sir. All of you beta, I'm waiting for only a minute, guys, and I will start the question after that. And I will start the question after that, but I'm just waiting for a minute here. Yes, beta. I hope you've all read the question, guys. I hope you have all read the question. Let us first, guys, decide our product mix. Let us first decide product mix, guys, like how we do in all the other questions, guys. First thing that you have to do better is first decide product mix based on external sales. Decide product mix based on external sales, and by ignoring internal transfers. Ignoring internal transfers. Internal transfers. So why are we supposed to ignore internal transfers and take it only on the basis of external sales, sir? So this is better to decide the opportunity cost or to determine the opportunity cost. This is to determine the opportunity cost of internal transfers. The opportunity cost of internal transfers. Understood, sir? समझ में आ गया? हाँ सर, आ गया. आप जो बोल रहे हो समझ में आता ही है. सो ठीक है बेटा, यहाँ पे ये करना है. अनदर इंपॉर्टेंट थिंग बेटा इज दैट लेबर इज अ लिमिटिंग फैक्टर. लेबर इज अ लिमिटिंग फैक्टर. Limiting factor, guys. There is specific fixed cost. There is specific fixed cost. Ranking should not be based on contribution per labor hour. Ranking should not be based on contribution per labor hour. Contribution per labor hour, guys. Instead, we will consider सब लोग साथ में कर सकते हैं बेटा, ये तो बेसिक्स ही है. Contribution net of specific fixed cost. But there is a drawback for this also as such, guys. There is a drawback for this. Applicable, guys, only when we rank. I'll tell you better this, Janto. I'll tell you this better when I prepare a statement, guys, and I'll tell you what is the drawback of ranking, guys. Because fixed costs will remain constant, guys, irrespective of whether you are manufacturing 1 unit or whether you manufacture 10,000 units. Whether you manufacture 10,000 units. All of you better write this part. Khatam karo ye. I hope you were all doing it with me only, guys. I hope you were all doing it with me only. Now, guys, let us all compute contribution, guys. Contribution, not a specific fixed cost, from every 10,000 units. Contribution beta, net of specific fixed cost. Net of specific fixed cost from every 10,000 units. From every 10,000 units. There are 4 products beta that we are manufacturing. P, Q, R, S. Okay, sir. This is from every 10,000 units. क्यों ले रहा हूँ बेटा मैं? Your specific fixed cost as such beta changes for every 10,000 units. Specific fixed cost beta is for every 10,000 units. Specific fixed cost is incurred beta for every 10,000 units. That is why I'm taking 10,000 units. Selling price per unit beta is 70, 69, 56, 46. Less variable cost per unit is 66, 59, 36, 37. My contribution per unit, guys, is 4 rupees, 10 rupees, 20 rupees, 9 rupees. Contribution beta from 10,000 units would be 40,000, 1 lakh, 2 lakhs, 90,000. What is the amount of specific fixed cost beta for 10,000 units? Specific fixed cost for 10,000 units. It is 2,500, 12,600, 15,000 and 18,000. You will get contribution net of specific fixed cost. $37,500, $87,400, 1,85,000, 72,000. What are the labor hours beta for 10,000 units? It would be 10,000 into 3 beta, 30,000 hours. 10,000 into 2, 20,000 hours. Matlab, what is the best possible use of your labor hours beta is what we're doing here. 20,000 hours and 30,000 hours. So if you take contribution net of specific fixed cost beta per labor hour, contribution net of specific fixed cost per labor hour, 37,500 beta divided by 30,000, 1.25. 87,400 divided by 20,000, 4.37. 1,85,000 divided by 20,000. 9.25. 72,000 divided by 30,000. 2.4. Please understand, guys, what is the intention here. First ranking is to product, third wala kya hai? R, second ranking to Q, third ranking to S, fourth ranking, guys, to this. Please understand, guys, what did I just do? I computed contribution from a lot of 10,000 units as such, guys. From a lot of 10,000 units, ranked it on the basis of number of labor hours. अब ये जो ranking किया ना बेटा मैं, whatever I did बेटा, this ranking will hold good. This ranking will hold good, guys. Will hold good only if products are manufactured in multiples of 10,000 units. Products are manufactured beta in multiples of 10,000 units. Multiples of 10,000 units. It is either 10,000 units or 20,000 units or 30,000 units or 40,000 units as such, guys. It is not for anything else. But sir, if you look at total external demand, as such, guys, total external demand, P ka 30,000 hai, perfect multiple beta of 10,000. Perfect multiple of 10,000. I do not have to do anything, guys. I will not have to worry about P. If you see, guys, Q, it is 31,000. I will need a separate calculation. R beta 28,000, S 18,000. We need to compute separately, guys. This is the perfect way of doing this beta. We need to compute separately contribution, because, guys, even if contribution per labor hour, guys, from 1,000 units of Q, 8,000 of R and 8,000 of S. Why, sir? Even if I manufacture 1,000 units of Q, guys, I will have to incur the entire specific fixed cost for 10,000 units. Even if I manufacture 8,000 units of R beta, I will have to incur the entire specific fixed cost. The ranking might not remain same, guys. The ranking might not remain same. So I'll have to recompute these rankings beta. So basically, if I have a limitation of labor hours, will I exhaust the entire? जैसे guys, यहाँ पे first ranking is given to product R, and product R का demand is 28,000 units. So do you want to exhaust the entire demand of 28,000 units, or First you will exhaust 20,000 units of R, then shift to Q, then come back to this. Things like that, guys. समझ में आ रहा है? I will prepare that also, guys. I will prepare this also, guys. Pay attention, guys. So in case of Q, R and S, beta, I will take a demand of partial demand, guys. This is not for the entire 10,000 units. 1,000, 8,000 and 8,000. 8,000, guys. 1,000, 8,000 and 8,000, guys. यहाँ पे if you see, guys, contribution, I can multiply by contribution per unit because I already know, beta, this is into 10, 10,000. This is 8,000, guys, into 20, 1,60,000. This is 8,000 into 9, guys, 72,000. Deduct specific fixed cost. Boss, specific fixed cost तो पूरा ही incur करना है अपन को. The amount of specific fixed cost, beta, that we are going to incur, guys, here is 12,600, 15,000, 18,000. So my contribution net of specific fixed cost. Contribution net of specific fixed cost. Negative 2,600. Gone. We will not manufacture 1,000 units of Q. We will stop at 30,000 units of Q. We will not want to meet the entire. See, guys, from those incremental 1,000 units, we are incurring a loss as such, guys. So we will not manufacture 31,000 units of Q. We will stop at 30,000 units of Q. $54,000. The number of labor hours is such, guys. Labor hours required. 8,000 units into 2, beta, 16,000 hours. 8,000 units into 3, 24,000 hours. You see, guys, what is the contribution per labor hour net of specific fixed cost? 1,45,000 by 16,000. 9.0625. And guys, here 54,000 divided by 24,000. 2.25. 2.25. Combine this and this, beta. Combine this and this. So guys, after you meet 20,000 units demand of product R, you will still manufacture product R only, beta, because that is even from 8,000 units of product R, beta, is a much better contribution from 10,000 units of product Q. 8,000 units of product R, beta, will still give us a better contribution, guys, from will still give us a better contribution as such, beta, than 10,000 units of product Q, guys. So you will want to manufacture 8,000 units of R first, guys, and then, beta, shift to 10,000 units, then shift to Q, beta. Restrict production of Q to, beta, 30,000 units only. And then, guys, S ka, beta, you will want to meet the entire demand, guys, of 18,000 units before you shift to P, beta, because P is giving us a much lower contribution. Much lower contribution, guys. Please understand this, guys. This is very, very important, beta, जो भी मैं बता रहा हूँ तुमको. It is very, very important, guys. ऐसे सोचो बेटा अभी. Contribution per labor hour, beta. Labor hour. So from 10,000 units, P, Q, R, S. P gave us 1.25, 4.37, 9.25. S, beta, gave us a contribution of 2.4. Then, beta, from 1,000 units of Q, negative. 8,000 of R is still giving us 9.0625. 8,000 of S, beta, is giving us 2.25. Combined ranking देखो बेटा. First ranking, second ranking, third ranking, fourth ranking, fifth ranking, sixth ranking. This is the combined ranking, guys. This is from 10,000 units and this is from partial demand. From partial demand. This is the order, beta, in which you're going to go as such, guys. First, beta, finish 20,000 units of R, then 8,000 units of R. So the order of allocation, guys, order of allocation. If you combine all of them as such, beta, order of allocation, 20,000 units of R, then 8,000 of R, then 30,000 of Q. 1,000 will not be manufactured. 1,000 will not be manufactured, guys. It is resulting in loss. Then, beta, 10,000 of S, 8,000 of S. It is much better to manufacture 8,000 of S only, beta, before you shift to P. P का कितना है बेटा total? 30,000 of P. P is giving us a very low contribution, guys. So you will move to P in the end. This is the order, beta, in which you're going to go. 1000 of Q beta will not be manufactured. 1000 of Q will not be manufactured because it is resulting in a loss. Sometimes guys, यहाँ पे बेटा everything is coming in the order, but sometimes what might happen beta is, see, after you manufacture 20,000 units of R, you might want to manufacture Q, because the incremental contribution from product Q that you're getting better from those 8,000 units is less. So you might want to manufacture Q first better and then come back to R. Things like that बेटा. But यहाँ पे ranking ही change नहीं हो रहा है बेटा. All of this beta is the correct way of performing the calculations. Now beta we will decide as to what will be the allocation of those 1,92,000 hours. 1,92,000 hours guys. समझ में आ रहा है नहीं आ रहा है? This is combined ranking guys. Combined ranking. This is combined ranking guys, on the basis of contribution per hour guys. On the basis of contribution per hour. And this is order of allocation. Order of allocation. Understood sir? Please copy this guys. All of you better copy this. This is the last part beta. I'm not going to finish the entire question in this class as such guys, but what we can do beta is we will copy this, we will allocate labor hours guys, and then end up the session. ठीक है? Yes sir. All of you better copy this. I hope you're all done, guys. एक काम करो बेटा, you're reaching the end of the session. तुम लोग ये करो बेटा यहाँ पे. You can copy as such, guys. You can pause and copy this as such, but I'll prepare the profitability statement in the next class and the resource allocation in the next class. Okay? This part is sufficient. We will do the remaining part. Pause and copy this, guys. There's a lot to copy anyways, beta. 1, 2, 3. Pause and copy, beta. Here, guys. Pause and copy this. Do pause and copy this. Pause and copy this. Pause and copy this. All of you guys do pause and copy this. Here, beta, pause and copy this. Pause and copy this, guys. Here, guys, again, this is a partial demand of 1000 units of Q, 8000 units of R, and 8000 units of S. You can copy this as well. Finally, beta, pause and copy this. Pause and copy this, guys, finally. Pause and copy this. I hope you're all done with this, beta. ठीक है, इसके बाद में comes बेटा resource allocation. You can obviously do that resource allocation if you want to, guys. Otherwise, I will be performing it in the next class. वहाँ पे भी एक थोड़ा variant आएगा, guys. A little variant here. I hope you have understood this, beta. This is a very nice question because there is specific fixed cost in this. There is specific fixed cost. So we've decided as to what should be the order of manufacturing these products, guys. I'll see you guys in the next class, beta. Definitely, beta, from the next class, I will give you a homework question. That's it for now, guys. Bye-bye, beta. Take care. Keep studying, guys.